All right, we're starting our day here, waiting for the market to open. It's almost 9 o'clock, 5 more minutes, and we could get an injection of liquidity. I almost took this trade right here. Something kept me back from it, probably because the time, and it surely would have stopped me out. Whipped right back up there, and I was thanking my lucky stars and God Almighty that I did not take that trade. But it's just real quickly, I've got to wait. Looking at the day chart, it's a huge drop, and it swept all these lines, which are days liquidity levels. It's already swept all of them except for one that's way, 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 way down here. Is that where the market's going eventually before the starts heading back up? It could be. It could be that we finally broke this consolidation area, and that it's going to come back up and test. We might even get a green couple of days coming up before it hits these lines, makes a lower high, and rotates even lower. We don't know. But today is all we have in front of us, and that's what we're seeing right now, is that it swept those levels, the local levels, and it's got a huge, huge bounce. On the 15-minute chart, you can see it's trending up, and there's a trend line, moving average support. It's got a nice reversal part at a Fibonacci level where it could easily break that and roll back down, which is kind of where my bias is. But I can't take any trades while it's looking like this. And on the hour chart, you can see how it's wanting to roll in a great Fibonacci level, great pintails off the moving average, sideways candles, but it's stuck in the middle. And until it breaks this trapped area and this trend line and shows us some freedom to the downside, one-to-one scalping ideas is really all we can do. You can probably try to get a quick one-to-one and just be very careful. Holding for longer than one-to-one is very risky right now. So if any trades take place right now, it literally has to be careful. Now you see on my rule-based trading system, I am set to go short. On the exponentials, I am sideways and there is no activity. And like I said, I almost took this trade right here, and I would have surely paid the price for it. Now that I see this sideways activity on both of these charts, I'm hands off. And even if it breaks, I'm not going to jump in on the first break. I want it to continue to show me green bars ignored, GBIs. I want to see some GBIs and a continuation, and then I might get in at that point. So right now it's hands off, waiting for the market to open, I think. So that's it. I think it's fair to also add, what would it take for a bias change or a direction change? And we already have the 15-minute going in the proper direction. So we have the hour. What's the hour doing? The hour's still stuck, but it's crossed over. It's it's trending up. It's in a range. So if with the 15, you would want to see then the 5-minute chart to also change direction. So you can't go long until we get some type of crossover and perhaps even a trend line break on this thing to let us know, hey, let's think about going the other way. Now, if we do get a 5-minute and a 5,000 tick chart going in the other direction, which is possible, where they both have to cross, they both have to start going into the right now it's just sideways, right? So we need proof, we need evidence that it's going to change direction. We need the trend line break, we need some continuation out of the range, because if it just goes sideways, if it comes up over the moving averages, I'm not convinced, because it's sideways. We can't lose track that it's sideways. Look at the 15 and look at the hourly chart, and so you got to be careful today. It got to be careful today. But we could change directions. We need the exponentials to change directions first and come out of a sideways activity. I don't want to deal with it if it's just sideways. And I'm not too convinced about just a simple close above the moving averages. So this is going to be a great exercise of discernment, a great experience to fine-tune our thinking and decision-making and executions, and see if we can hold our rules in place, and also see if we can fine-tune those rules and optimize them to be even better. All right, I need to go over the trades that I did today. The market was choppy on the 5-minute chart. Let's take a look at that, because I was trying to think about shorting this thing, and it just didn't go the way I wanted it to go. So let's take a look at it. The market was red, but it was bouncing up really strong. So there was a long pintail on it overnight, which you can see right here on the day chart. Let's see right here. It started to come up. So when I got up this morning, it was up. It was still a red day, but it was pushing up. So right here at the open, we were looking, which way is it going to go? Is it going to go this way, or is it going to go this way? All right. And it was very hard to determine. So I had taken a couple of what I would call good trades, because it had broken down below the moving averages on all my time charts and was coming down this way, and it had broken a pivot and everything else. And so I figured I'd take a couple of tries down there at the bottom. So it went past the line, it went past the pivot, it started to push down, and on my lower time charts, that's where we took the trade. I tried 2 times, it did not work. I would call those 2 good trades that did not work. We could see that area where I took those 2 good trades right over here on the right side. Everything was breaking down, and I thought they were good trades. They were starting to push past the green candles. They broke down here. I took that trade, got stopped out up here. And then I figured I didn't have my stop in the right place, so I took the next one, which was actually kind of low. I should have took it up higher, but I took it down at the bottom, and it did come back. It actually did come up there and stop me out on the second one. So it would have stopped me out up there anyway had I had my stop up higher. So those were the 2 good trades that I took, and I ended up just studying, and I took this trade right here, which I thought was a reasonable trade, but it looks like it ended up just simply being, where it had bounced. So it bounced over here, and I was taking a trade right before it broke down. Now, sometimes, like in this case, sometimes in the case like over here, it looks okay to do that. There's sometimes where it'll be consolidating up here, and it looks like you could take the trade before it gets down to the bottom. There might be plenty of room to get down to the bottom. But in this case over here with this trade, it was already pretty much down here at the bottom, and I didn't have room for it. I was anticipating the breakdown, and it didn't break down, so it came up and stopped me out. So I lost 2 good trades, and then I lost this third trade, which was a bad trade. And then, over here on the 5-minute chart, after that, let's see, after this particular bad trade, let's take a look at the 5-minute chart and show you exactly where that had taken place. Right here. Once that 5-minute chart did this bottom down here, this third one, the circle's the first 2 good trades. It looked like it was breaking down. And you could see that this pintail on the third trade, which was right here, it was a bad place to try to take that third trade short into these pintails, which had already rejected. That's why I call it a bad trade. So back over here to the exponential charts here, then it started to just trend up, and I didn't really do anything. I kind of just didn't take any trades, and I really probably should have been paying attention to the 5-minute chart. Looking at this right here, I was like, when's it going to break out? What's it going to do? And when it finally did make a decision to break out, I wasn't watching. And it would have broke out on all my time charts. The 5-minute, let's take a look at this right here. Yep, over here too. The 5,000, it broke out on the 5,000 as well, as we can see. And then on the exponential time charts, we would have been able to start taking our trades based on what we see on the exponential time chart, which is, let's get back over there. Right here in this area right here, you got the classic trend line break, consolidation, continuation. All right, that was on the 5,000. Again, we see the 5,000, but also taking a look at the 500 tick chart, that would have taken place right over here. And we had plenty of opportunities to go long, 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 long. Now, I did take some trades up here. I took 2 trades up here. One was a loser, one was a winner. And that's okay. The winner was better than the loser. So let's take a look at that. I finally did decide, okay, when it got up here and started to close above this red line right here, I made my decision that I believed it was going to go up to the close of yesterday, which it did. I took a trade and it stopped me out immediately, and then I took another one and it had gone straight up to the top. So let's examine those two trades, what I could have done differently, what I did right, and then I'm going to finish up this video. Here's the first trade right here I took. Let's take a look at why I took that trade, and it was a reasonable try. Right here, I took that trade right here because it was bouncing up and it took off over the top of these red candles. It took up over the top. I got in, it actually went to 1-to-1, and I could have broke even on it, but I knew it was going to go, I believed it was going to go up to that red line, and I didn't want to get out of it, so it stopped me out right here, as you can see. Once it consolidated and popped back up on that strong green candle, you see a strong green candle, I said, I'm going to get back in this thing. So when it came back from up here, when it came back down, I got back in it. And then I held it for a 2-to-1 return. And when it up to 2-to-1, you can see right here, there's my arrow. That's where I got out of this trade. And unfortunately, I didn't hold it and hold it and hold it and hold it and hold it. So what can I learn from this? Well, pay attention. I don't take your eyes off the charts. But the problem is I took my eyes off the charts, way too early. It was still 10:40. And I can see taking your eyes off the charts during lunch, but I still had over an hour to go before that happened. So I took my eyes off the chart, missed the big move, which would have made way back more than I lost on anything. As far as these winners go, I mean, I didn't expect it to continue that far up, and you never do. When you have a banger move, a big move, a move that just blows your mind, you never think it's going to do it. You don't expect it to, and you don't anticipate it to do that. Those are the best moves and the biggest moves, and the moves that actually can really make a difference between just being an average trader and a really, really good trader. Just barely paying the bills and really being able to give to charity. So I just need to remind myself, this is what happens, this is what I did, and learn from it, and hopefully do better and better every single day. All right, I just took an afternoon trade too. I want to include that in the video. It was a short, and it's a tricky short because what we have on our exponential charts, or on the 5-minute, is prices in a transition phase, meaning it hasn't really strongly changed directions yet. You see on the 5-minute chart, all it's doing is really bouncing down to the 20 EMA. It fell below the faster one, but these haven't even crossed. They haven't completely crossed on either chart. Price hasn't completely closed or committed to the bottom side of these moving averages yet at all. But I decided to take a short anyway. It's based on intuition on where the day chart is and the close of the previous day, being that dash line right there. I'm thinking price has come up so far that it could fall below that dash line, and that's what I was hoping. All I did was do a target to that line, as you can see on these charts right here. The exponential charts were giving me some signals to take a 1-to-1. I didn't have a clear signal to hold it because, like I said, the 5-minute and 5,000 are not really committed. They're only in the transition area. They're not in the fully committed changed direction area. So I said, well, let me try this. It was creating a bear flag right here, and it just started to roll. I waited for it to come all the way back up close to the pivot level where my stop loss would be, and it started to turn red, and that's where I got in. So I got in right there, as you can see that dot, and we got it down here to target 2-to-1 at the dash line. As soon as it crossed, it came right back up, and it would have broke me even for break even, and there it goes. It would have hit my stop to the stop side. So again, price is not completely transitioned to the downside. So if I take a trade, it's got to be quick. It's got to have a reason on the macro level, day chart and whatnot. Got to have a reason for that. And you got to take your profit, have your target, and just execute it with precision. To hold it in this case would have been a blunder. So I want to make sure I included that trade in this video. All right. I'll see you in the next video. God bless you. Peace.